Good evening. We're on gold today using Proteus, September the 8th, 1734. We're looking at a short side signal with a medium probability maturing here on ITM Proteus on gold, or the XAU USD currency pair inside FX Primus on MetaTrader 4 or your own broker's demo or real account inside MetaTrader 4. So we're going to shoot for a short side low trade here using a $25 investment just before the next 5-minute interval. And once we're into the trade, we'll come back to you just before expiry. All right, back again here, 1739.49. Just a few seconds left to this trade's expiry here. The trade went into the money very aggressively, bounced back up off of entry, and then back into the money quite comfortably to expire there. We've now expired with a $42.5 gross return, and the next move here shown by Proteus is a low probability move to the long side, which we will conveniently avoid. And secondly, we only need to go interval by interval. So the next legitimate interval is the 1745 interval if there is a valid medium to high probability opportunity available at the time. All right, we're back. It is 1749. The 1745-minute interval had a low probability opportunity, hence we skipped it. We only trade medium and high. This opportunity has a high probability of success with a short side focus here shown by Proteus. So we will go ahead and execute a low trade here, $25 investment to expire at in 5 minutes time. And once we're close enough to the next interval's price, roughly 5 seconds away, we will hit the buy button at 55 odd seconds to get into this trade. Once we're into the trade, as usual, we will come back to you just before expiry. All right, back again. It is currently 24 seconds through to expiry. The trade is touch and go here. It looks like it may fail or not, but we have to be prepared to recover should it fail. So given that it is so close to the entry point, we will assume it will expire outside the money and prepare ourselves for a recovery trade. Even though it's in the green zone at the moment, we don't know what's going to happen. So recovery trade, twice the initial investment if the equity supports it, which it does in our case, and we're going to execute the trade regardless of the previous trade's outcome and go ahead and see what happened there. It's literally on the money. It might expire on the money. It might expire outside of the money, but we will wait until this trade's expiry. All right, we're back with roughly 25 seconds remaining in this recovery trade here, executed with twice the initial investment of $50 because it was within our risk parameters. The initial trade expired outside of the money just by literally a blip. We were unsure of that outcome, therefore decided to take this recovery trade. This is the strategy that's been discussed and shown live for quite a few trading sessions now using Proteus. The recovery trade has now expired in the money and serves to recoup the loss on the previous trade that expired outside of the money, even though it was by just a blip, a micro pip, and will give us a small profit on this trade in addition to recovering the loss on the previous trade. So this is an example of using Proteus to your advantage. When a trade fails in Proteus, it's most of the time because of a mistimed entry. What that means is Proteus was unable to select the most appropriate entry point in terms of time. So a loss taken because of a Proteus decision does not necessarily mean it was a completely bad trade. It means that the likelihood of that trade having been mistimed is very, very high. Therefore, the immediate next trade is very likely to be successful. In such scenarios, we can choose to either stick to our initial investment, which was 25 in the previous case, or a slightly more advanced strategy is what we did today and have done so in the previous sessions using Proteus, which is to execute a recovery trade in the immediate interval after the previous trade, which means that if the trade is about to expire outside of the money, you immediately execute a recovery trade to capitalize on the new timing of the move. And that is only a one-off procedure. If this trade fails, you are not going to go ahead and keep executing recovery trades because that would translate to martingale or grid trading oriented approaches, which are not advisable at all. A recovery trade is a one-off only because the probability of a mistimed trade is very high. If a Proteus trade fails and you execute it once, if it wins, the likelihood of it winning is very high in such scenarios. If it doesn't win, however, you do not execute a recovery trade again. This is an example of using Proteus. Proteus is a leading indicator on the right-hand side of your chart with additional confluence metrics on the left-hand side of your chart. You can either follow the leading indicator on its own on the right-hand side, or you can combine the left-hand additional confluence metrics and the leading indicator on the right-hand side to come up with a more robust, perhaps a little more conservative view of where you'd like to go in the market next. Thank you.